So if you're tuning in now, chances are you've missed the tax deadline boat. And the consequences of this delay can result in penalties soaring up to a jaw-dropping 47.5% of your original tax bill. But fear not, procrastinators. We've got you covered with essential tips, and by the end of this video, you will know exactly what you need to do to avoid Uncle Sam's wrath and keep your finances in check. For those of us in the US, the tax day sailed past on April 15, 2024. If you reside in Maine or Massachusetts, you still have until April 17, 2024 due to state holidays. If you are planning on filing an extension, that boat has also sailed, as the deadline to file the extension is the same day that the taxes are due. Feeling the pinch? Don't fret. But remember, if you owe, the IRS wants its share sooner rather than later to dodge those penalties and interest. So what exactly happens if you miss the deadline? Let's break it down. Here are the 3 potential scenarios you could be in and the consequences for them. If you're thinking about skipping on the return because you don't owe any taxes, think again. Even if you don't owe anything, missing the deadline could cost you your refund. You might lose out on potential cash if you wait too long. Avoid giving Uncle Sam an interest-free loan and file on time. If you file your tax return on time but fail to pay the taxes owed, the IRS imposes a failure to pay penalty. This penalty accrues at a rate of 0.5% of your unpaid taxes per month, with a maximum penalty of 25% of the taxes owed for the year. For instance, on a $1,000 tax bill, the monthly penalty would be $5, capping at $250. It gets more troublesome if you owe taxes and fail to file your 2023 tax return by the deadline. The IRS imposes a failure to file penalty, which amounts to 5% of your unpaid taxes for each whole or partial month your return is late. This penalty is much more severe, with it being 10 times more than the scenario where you filed the return but didn't make payment. For instance, on a $1,000 tax bill, the penalty would be $50 per month. Additionally, if your return is over 60 days late, a minimum penalty applies, which is the lesser of $485 or 100% of the tax owed. Let's not forget the interest. Those unpaid tax balances will start to haunt you if don't make Uncle Sam whole soon. Interest starts piling up at a staggering 8% from the original due date until you clear your dues. Side note here that in late 2023, the IRS waived about $1 billion in tax penalties, but not interest, for tax years 2020 and 2021. But this generosity comes with conditions: owing less than $100,000 in taxes for each year and receiving an initial balance due notice before December 7, 2023. So if you meet this criteria, make sure your past due fines are correctly reflected by the IRS. Whether you're certain about your tax situation or not, there are strategies to ease the burden and stay on the right side of the IRS. First, ensure you're taking advantage of all eligible tax credits, such as the Child Tax Credit or Earned Income Tax Credit, EITC. These credits can significantly lower your tax liability. Don't overlook potential deductions, especially if you're self-employed or have significant medical expenses. Running the numbers can help determine if itemizing deductions is more advantageous than taking the standard deduction. Stay informed about available tax credits and deductions related to your adjusted gross income, a GI, to maximize your tax savings potential. If you're unable to pay your tax bill in full, take proactive steps to address the issue, such as setting up a payment plan with the IRS. Ignoring the problem can lead to costly penalties and interest charges. When filing your return, pay as much of your tax bill as possible to demonstrate good faith. Then, contact the IRS promptly to request a payment plan, which can be done via phone, mail, or online. Setting up a payment plan can help you avoid severe consequences, such as wage garnishment. These plans allow you to spread your tax burden over a longer period, making it more manageable. By staying informed about tax deadlines, exploring deductions and credits, and taking proactive steps if you owe taxes, you can navigate tax season with confidence. Remember, addressing tax issues promptly can help you avoid penalties and maintain financial stability. Please consider subscribing if you found this information to be helpful.